You are watching MDN Radio.
And we're back again. As I said earlier, that we're going to have a continuation discussion about the moving averages. Since last week, I already introduced you what is moving averages, and for today's episodes, we're going to discuss on how to set up the moving averages. Actually, there's a lot. Okay, there's a lot of moving averages out there, but I'm going to discuss to you today at least two moving averages lang, the number 8 and number 20. Okay, but before that, I have a simple presentation to you about the moving averages again. Actually, I already discussed this last week, but I'm just gonna play it again. It's about what is moving averages. Okay, I bet we can play it right now. Moving averages is a technical indicator that refers to an average price for a participating trading instrument over a specific period. Okay, moving averages are used by investors and traders to track identified trends by smoothing normal day-to-day price fluctuation. Okay, as you can see there, and then there are various moving averages like a 20-day moving averages, for example, calculate the average price of a specific instrument over a 20 days. A 20-day moving average can be seen as a blue line. Investors in this line to support a resistance level indicator and base trades around it. Moving averages are calculated by adding up the previous X number of a previous and dividing that sum by the total number of periods. For example, a 5-day moving averages is calculated by totaling the previous 5 days price data and dividing by 5. A simple arithmetic means each time a new period occurs, the moving averages moves forward, dropping the first data point and adding the newest one. As a technical indicator, a moving averages appear as a smooth curving line that provide a visual representation of stock longer-term trend. Faster moving averages with shorter look-back periods are choppier. Slower moving averages with longer look-back periods are smoother. Okay. So, I'm just gonna discuss that in layman's terms kasi medyo, ano yun eh, medyo, what I call this, medyo nosebleed yun in a normal normal traders lang, okay? So what does moving averages means? It means it's a lagging indicator. In other words, it's also waiting. It shows on the previous movement of the market. It doesn't tell you the future, okay? It doesn't tell you the future of what's gonna happen to the market. It just shows you kung ano yung mga nangyayari, okay? What's really happening on the market. So it's also moved on the movement, also on the support and resistance level, kung saan major touches of the support of the resistance level in of the movement of the market. Now, in order to do that, we're going to show you paano i-set up, okay? How to set up the moving averages. First, we have to click, yes, as you can see, there's an indicator list. After that, this you're gonna see. There will be a list like that. There's a moving averages. You can already click it above if it's already clicked before. But you have to do, if you cannot see the moving averages there, you have to click trend, okay? After trend, this you're gonna see. You already see the moving averages. So when you click that, this will gonna appear on your screen. Next, that one, okay? That's what you're gonna see. You can already change the parameters. You can edit there. As I am using number 8, okay? The period will be 8. The color is gonna be yellow, and the average for the opening and the closing with that is gonna be close, and it's gonna be modified as simple. So I just gonna click okay, and then this will gonna happen, okay? That's what you're gonna see. There's already some yellow, as you can see on your screen right now. There's parang as you can see on the candlestick, there's a yellow something like that. It's moving. That is a moving averages. So if you want to add more, okay, if you want to add more, but for me, I'm using for the buy and the sell, it's gonna be the yellow and the color blue, and this would gonna be the effect with that. Okay, next slide. Okay, that's the one. There's a color blue. So it's gonna be the movement of the market using that. So by the way, this currency that I'm looking right now, it's the movement about the gold. Okay. So if you're gonna look at right now on your screen, okay, if you're gonna look at right now on your screen, there's already two moving averages: the color yellow and the color blue. Now, how to use the moving averages if you're going to trade in forex trading? Uh, if there's a if above, okay, if the blue is below and above is the yellow, okay, if the 20 is below and if the above is the number 8, it's gonna be what? That's gonna be a buy. Okay. There's a very good representation about that on the next screen. Okay, next screen, if we're going to trade it using the monthly base, yes, as you can see, that's the monthly base. If you're gonna look at right now, if the yellow is above blue, okay, if the blue is below of the yellow, parang ganito siya, parang ganito. Okay, the market would might state that the market of that particular trades, it's gonna be going to be buy. Now the question is, what time frame would it be nice to use? I would suggest all time frame, you can use the moving averages, okay, but I would suggest that you're gonna use it on the higher time frame. Again, what are this higher time frame? Again, we already discussed this way back before, but if you really want to know how to do it, again, if you want to know how what's the higher time frame, lower time frame, you can just go back again to our previous episodes. Now, the higher time frame, again, it's gonna be consist like monthly, weekly, daily, and H4. The lower time frame will gonna be from H1 up to M1. Now, I would really suggest, if you're going to use the moving averages, I would suggest you have to use it on higher time frame so that you have at least, okay, at least a very good picture on how to use the moving averages. Now, as you can see right now, this is the picture of moving averages on your screen, moving averages about gold. So using that parameters, okay, if again, if the yellow is above blue, that's gonna be buy. If the yellow is below, if the blue is above on yellow, that's gonna be sell, as you can see on your screen right now. So that is monthly. The question here, what if it doesn't concede? Okay, what if it doesn't replay? If it's a higher time frame, the moving averages is like that. What if the market is different on the lower time frame? So that is the monthly basis, and then we're gonna look for a weekly basis. So weekly basis, that is the weekly basis. Okay, as you can see, it's really up, but it's almost crossing the line. So again, if the yellow is above blue, that is buy. If the yellow is below, it's crossing the line. Okay, so ang yellow na naman nasa baba, the blue is up. So that's gonna be the market is sell. Okay? Again, if the yellow is above blue, the market is buy. But if the blue, if the yellow is no, if the blue is below yellow or above no, dito sa taas ang blue, nasa baba ang yellow, definitely that's gonna be sell based on the chart right now. So that is weekly, and now we're gonna move forward to daily. Okay, so that is the daily. As you can see, the market really went by like that, but because of the intertwine and nag-exchange siya, definitely the market will go on sell na naman. Again, bakit it's not the same movement if the monthly, weekly, and daily? Again, from one candle of 1 month, equivalent of how many weeks of that? That's 4 weeks. So 1 week equivalent of 7 days. So again, before everything went go, again, before you're going to trade, you look to the higher time frame, because again, I already discussed this before, the market will go, usually goes to its trend kung saan siya pumupunta, because the market in the lower time frame, there will be lots of movement. Okay, there will be lots of movement, but the total movement of that equivalent of the higher time frame. So again, you have to look where the market is really going. But again, that doesn't guarantee everything at all. At least you have just a guidelines. Again, if you're using this moving averages, guys, you will not depend on your trade on them. It will just be your guidelines. Because if you trade your trades based on the moving averages or whatever indicators that you're using right now, that is I will not say that it's gonna be a winning strategy because it always depend on the movement of the market. So all indicators are waiting on the exactly movement of the market. And that means it doesn't guarantee that even if you're using lots of different indicators, you will never face losses because again, if you just base your trade technical analysis, that's gonna be okay. But again, there is also fundamental analysis. What is this fundamental analysis again? This is particularly like the news. What if the market is, we saw the market that very nice pattern like this, and we know that the market is gonna be go up, but all of the sudden the market went go down. So definitely there is a sudden news happen. Even a simple tweet to the most powerful person in the world, the president, it would really affect everything. Okay? So it doesn't mean and it doesn't guarantee again that even if you base your trade on the indicators, whatever best indicators or the most expensive indicators that you're gonna put, it doesn't guarantee at all that you will never face losses. Again, in doing forex trading, you have to do both sides, the technical and the fundamental analysis. Technical is what we're doing right now based on the chart, movement of the chart, the pattern, the indicators, or whatever you're going to do within the chart. That is technical analysis. But again, there is also fundamental analysis that would really affect the movement of the market, which is really unpredictable. Okay, it's especially even if there's also calamities that would really affect the movement of the market. For example, in New Zealand, example, there is a wide range pandemic for their cows like that, for example. So definitely the market there, it's gonna be what? It's gonna go up or down. So you have to know also what to do. You must not only just doing in one direction. You can do both side, or you have to wait for the exactly when as the market is going or where the market is probably be heading. Okay, but even if you already, again, even if you already thought that the market's gonna go this way, again, that is really depend on the movement of the market. Okay. Again, I bet that is a day. What we showed right now. This is based on the daily and H4, as you can see from the monthly, from the weekly, from the daily, from the H4, from the H1. The movement of the market is quite not the same, but the direction is the same. Again, whatever the smaller time frame been doing, the end product of that would always be the higher time frame. Okay, again, I already said this before in our previous segment, but I'll just gonna make a recap. The smaller time frame, whatever they're going to do, the end product of it would always reflect on the higher time frame. So at least base your not base, at least use the higher time frame as your guide so that you would know probably where the market will be heading or will be going. Okay, at least you already know that. So at least we're already done with the moving averages, and next week we're going to discuss the combination naman. Okay, or I might add more. I will add more moving averages like the 50. The 50 is we're gonna tell you where the market is probably heading, and also because the 8 and 20 moving averages, maganda yun for the higher time frame. What are the moving averages to use also in the lower time frame? Well, we're going to discuss that next time. And then after that, we're going to discuss also which level will be the best, not best, but at least the better period to look at if you think that the market is already doing reversal or not. Okay, again, all of these moving averages, all indicators that we're using, they are just waiting for the movement of the market. It doesn't predict, or it won't gonna tell you the future of what's gonna happen about it. Okay, so next week we're gonna discuss about that. So I still have to think on what are the things that I'm going to discuss. It's either I'm gonna add more moving averages, or I'm going to combine the fractals indicator and the moving averages, which that will be very exciting if we're gonna combine the fractals and the moving averages. At least we already have the broad idea of what are the best things to do, or to do if we're going to do the forex trading already. But again, even if you already have all these indicators or whatever indicators you're always having that doesn't guarantee you. Which only guaranteed you, it's only just always manage your risk properly. Okay, by managing your risk properly would really make you stay longer on the game. Okay, so next week we'll be having a discussion about that. So uh, I think that's all for now. So we're just gonna have a break for a moment, and when we get back, we're just gonna discuss something more about the things that we're going to do about the so that we can help the Typhoon Ulysses victim or the other people or other places in Luzon that are really still affected with this the typhoon. Okay, thank you. Still here in MDN Tele Radio. Watch us anytime, anywhere.